All right. Good morning, everybody. So looking at FX Street, durable goods is going to be um, kind of the big one for the day. But really, everything is back to the debt limit again. Yeah, that thing. And I think it's going to continue to be that until we finally move past it. I still have the base case argument that they're going to buy themselves a little bit of time, maybe 6 to 8 weeks. And once they do that, then they'll get some kind of resolution. This is very likely going to trump anything else. So while we do have other things on the agenda and we do, there is a lot here. I think it's going to be on the second footing, right? Like on the back foot. So 8:30, 10, and then 1 o'clock, we have the rig count. That one also really isn't anticipated to be anything. The rig count doesn't change that much most of the time. It would have to be something drastically wrong, right? Like a new series was brought in and maybe there's a recall and they had to shut all those rigs down. That'd be just about the only thing that would change the rig count. I say that, but it's usually the surprise stuff, right? Anything that would change the rig count would probably be something that none of us are thinking about. And that's why it would be a shock and it would be a surprise and the market would react. And volume is, I guess, kind of where we would expect it to be. Everybody's still a little concerned about the resolution of this debt ceiling crisis. So they're holding back. And then on the other side, they got to get work done. So sitting at around 87, that fits. It's not too low and it's not too extreme. We do have a market maker move this morning. If you're unfamiliar with that, it's a thinkorswim derived concept. When the front month or front week or front series is greater than the back series, then it is called a market maker move. Usually it's something that you see on earnings or something like that, events. If there is a market maker move on something, you will find that it's right there. If there's no market maker move on something, you just won't see anything there at all. So for an example, we go to Caterpillar, it has a market maker move and it's right there. I think just about everything I could look at has a market maker move this morning. All right, lots of indecision looking at the daily chart. We made it back down to the bottom of that range. We got bid right back up again, and now we're working our way back through to the top of the range. Just keep in mind, this zone right here has an expansion above it and it has an expansion below it, but it's still, this is the zone. So getting back above 41.75 will have us challenging that 4,200 again. If we can get a breakout, right? You can see the last time we stayed in here for quite a while. All right, we don't have an MDP. We've been crisscrossing through it most of the night. We are inside day. We got a relatively narrow initial balance. And until or unless something changes, we're going to want to sell into strength, buy into weakness. It's on the idea that without a resolution to this debt ceiling issue, any breakout is more likely a fake breakout, and any breakdown is more likely a fake breakdown. Now, that's only going to work until it doesn't, right? And nothing's 100% all the time. So rather than assuming when we get a breakout that it's going to fail and trying to short that sucker, all you got to do is wait for the breakout to fail and then short that sucker, right? So there's no reason to assume or to jump in ahead of it. It's a pretty narrow range, so it's not like you're going to get a massive amount of points anyways, but 6 or 7 points with 10 contracts get your day done and you don't have to worry about it. $10-day, 30-minute volume profile. It's kind of lost its shape. We have a slight capital letter B, but it's getting harder and harder to see it in there, right? It's getting more sloppy. When we're at the high, we expect to go to the low. When we're at the low, we expect to go to the high. We are expanding away from the point of control, but it has to prove it first. Otherwise, we're very likely going to get tangled up where we did yesterday and fade right back down again. There is a shallow area above that though. So if we do get an inside day breakout, we should move through that zone into 4,200 relatively easy. We can see that shallow area back there. Five-day, 5-minute volume profile, really narrow in the overnight, like we would expect. We've been building up a lot of volume here across these highs, but we've been there for a little while. This is starting to prime up a little bit like that setup where we get the Globex high and we pull back off of it, and then we go into the RTH open and we run back up and retest that high before dumping down again. Now, of course, we don't have it yet, but it already seems to be lining out that way. No POC to carry forward from yesterday because we've crisscrossed through it a couple times. Still have a VPOC overhead 41.93, and we got one down below 41.23. It's a nice 70-point range. I mentioned in the weekly expected move about breaking down outside the box and coming back in again. And how we were very likely going to close inside the box. So that kind of takes the argument out of a downside breakout. Not to say that we can't, just, we're going to expect to really just maintain the range. And we're going to look for weekend shenanigans, right? Any kind of news coming out in the later part of the day that's like, oh, by the way, as you go into the weekend, here's some data. Call it like a data dump. It's where they save up all the bad news and hit us with it all at once. Or all the good news. They've done that too. Looking at next week, they're pricing in more volatility than we had this week, but the day is still early and next week's lines aren't set in stone yet. They won't get set until 4:15 tonight. So between now and then, they can get wider, they can get more narrow. Um, we have to let it play out. But so far, it looks like they're pricing in more volatility for next week. It is worth noting the market maker move, right? Um, Generally, that happens when they start hedging in the front. So if they're also looking for some shenanigans today, a little bit of gotcha surprise, that's what they're pricing in. It would be a 0.5% on the NASDAQ, which is just getting an inside day breakout now. To give it a little bit of context, that's the August flipping point, right? When we ran up into that 200 and the entire market flipped. And then we had the Jackson Hole Summit where Powell did the mic drop. Then the October lows and the run back out again. So kind of a big deal to be getting this breakout. There was a lot of trapped traders that we needed to work through from back here. And we are firmly done with that, right? There's no more of that to even be concerned with. Now it's just the next level. It's the next area that needs to be dealt with. $14,070 is the proximal line that we want to keep our eye on. And we'll call it 14.3 for the distal line. And for the S&P, it hasn't even made it back up to that August level yet. $42.80 and $43.25. Just use some round numbers. Give me just a second. Checking something out here. Never mind. So nat gas is down this morning. Dollar is a little weak. Then on the other side of the coin, we've got KWEB up 2%. Gold's making some moves. Emerging markets. Semiconductors still, which, I mean, that's pretty impressive. Biotechnology, some materials. Finance is trying to wake up a little bit, and so is energy, but they just haven't done enough yet. All right, things are getting out of control with the 10-year. We're sitting above that 3.8. We really got to get this reversal here in the bonds. Now, you can watch the ZB, the ZN, the ZF. Once the market opens, or at least after, say, 8:30, you can start watching TLT and TNX. Besides the debt ceiling, this is the next most important thing. You could pretty much just throw everything else out and keep your eye on what's going on with bonds and yields and how they're affecting the dollar. They were supposed to defend the other day. We talked about it on Monday. They tried, but it didn't work, right? So we had that rally, then a really big gap up, dumped it all back down. So they gave it a good shot. This morning, we're up off from where we closed. We can see that pre-market line at 100.59. It's blue. We closed it down here at 100.26. So in the pre-market, we've had that nice little rally up. But this thing needs like shock and awe. If you remember when they were first starting to deal with runaway inflation, they said, oh, we're going to have to hit this really hard and really fast. We need that shock and awe. We can't just kind of ease into it a little bit at a time. They needed to shock the system. The failure to defend on Monday with just a regular move obviously didn't work. They're going to have to come in hard and fast. This slow grind recovery as a defense, I don't think it's going to cut it. So you're going to be watching today for bonds to get a little bit out of control, right? We want to see today these things lift off like a rocket ship and kind of get out of that wishy-washy, maybe kind of sort of situation. It'd be a really nice TRB setup. Daily gap is gone. We took that out. So it'd be a nice setup all the way around. We just got to get it, right? So we want to see some real follow through. And we want to see that they actually have some control here and can defend like they should have on Monday. Now, there are lows that we can get through, right? We can go back to 98. We can go to 99. But you got to think about what the TNX would look like if we did get down to, 98, 99. And I really think that would be driving this above 4. And then we're going to have some real serious consequences. So this is the one, right? This is the deal. Above and beyond anything other than debt limit news, this is what you're going to want to be keeping your eye on today. And yeah, I mean, stand aside or get ran over. Just be prepared for it, right? That way, if we do get a big explosive move, you can hop on it and take it for a ride. All right, so we got an inside day in Europe. They managed to pull it up off of the lows, but that's about all they managed to do. Still, they're holding the line. It'd be a nice way to end the week if they can end it there. And for the dollar, it's not exactly a tweezer top, but still a nice reversal pattern. We got to follow it through on the end of the week. Be watching today for an inside day breakdown. All right, so this is the little homemade ETF, my own version of pre-market FANG. You can do the same thing on Thinkorswim if you don't have a trading view. You just use a plus sign between each of the symbols and then count how many symbols you have and divide it by that at the end. So it's up a little bit this morning, showing that they're working as a team in a more positive light, that together as a group, they're more positive than negative this morning. So if we go in and look individually, Apple's up. Microsoft, yeah, not, but not down by much, really. If I wanted a long trade, a continuation of the previous day, I would much rather have it fade a little bit in the pre-market than have it expand more higher in the pre-market, right? If I wanted a long today, I'd rather see this. All right, Amazon's up. But I'd say the range is clearly defined in Amazon. You know, you're going to have to temper your expectations. There was an article that was kind of talking smack on Amazon that you know, it's missing out on the whole AI craze, blah blah blah. It wouldn't take much for Amazon to incorporate some AI and to drastically alter its profit potential. So something to think about, kind of priming up. This isn't a new concept. Somebody was talking about this the other day with another company. I don't really want to steal their thunder and mention it before they do, so I'm not going to bring up the name of the company they were talking about. But if you take that same idea and kind of apply it to Amazon, if you're looking for Amazon to, you know, piggyback off of this AI hot fire, then long Amazon with a target back to 145, maybe 150 over a 1-year span. Not necessarily out of line, but at this point, you know, trying to take a trade at 150 or above on the idea that they might do something like that without any proof is just gambling, right? You're just taking a hypothetical. 1 year out, or at least, to January of 2024, looking at something in the $150 range on Amazon, you're looking at calls that are around $3. I mean, it's 300 bucks. It's not bad. But when you consider it's just a coin toss, that it's no different than rolling dice in Vegas, that's a $300 dice game. If you widened it out into a spread, then you're looking at about 40 cents. Me, though, if I was going to do a spread, I would much rather make the spread worth my time. So I'd like, something a little wider, maybe 20 or 30 points. So here's a 40-60, it's 20-point wide spread, and there's about $3 of risk. The thing is, though, I like to be able to defend my trades. And if you just came in and bought the 150 call 238 days out, you would have 238 days to get your $300 back. And you would have plenty of opportunities to sell calls in the front end to get your $300 back. Right now, that is a 150. It's really far out of the money when you're in the front end. You can see the 150s, there's nothing here. You couldn't make your money back trying to sell these. That's just unrealistic. You'd want to kind of get a little closer, right? Well, there's $100 right there if I was to sell that option. And if I was a little more frisky, get a little closer to the money. So when you're strategic and picking your days, like a day when we start to sell off hard and it's just a negative morning, you sell a call in the morning, you buy it back by lunch, make yourself, $70, $80, and you pay off that $300 of risk that you have a little bit at a time, because you've got a whole year to do it, or at least, 238 days to do it. And then you're just holding this free call that doesn't have any risk to you anymore. And you sleep good at night because no matter what, you've paid it off. You don't care. All right, Tesla's got this really nice wedge forming this morning, similar to the wedge that we had yesterday, right? That same kind of pre-market wedge. You can see the outcome, obviously, that we had from yesterday. Not really expecting anything different today. Just a whole lot of hurry up and wait. So debt resolution, and then keep your eye on dollar and yields. And it's going to be this rising tide or falling tide situation. When that news hits, everything's going to go. So really kind of think about what is really overbought that has a long ways to fall. That way, if the news that comes out today is negative and it starts to send the market down, you're trading things that are near their highs, not things that are already sitting at their lows, right? We don't want to short from the hole. On the other side of that, think about things that are really oversold sitting near those lows, so that if the news today is positive and we start to rip to the upside, you're buying things that are near their lows, not things that are already at their highs and breaking out. If you already have the list available, then when the news comes, whichever side it is, you've already got a game plan. If we do break to the downside, a butterfly at 410 would be a really cheap way to go. I don't think that would be out of line at all either. Yesterday's low is pretty much where the weekly expected move is. It's 411.99. And if you look at the pre-market low, we had 411.62. I don't know, I guess it wasn't as close as I thought it was, but that'd be a weekly expected move breakout if we get that downside move. And just remember, that's a handicap. We're not expecting to get an inside day breakout to the downside that gets us outside of that box. With Bitcoin getting a little bit of attention this morning, you might want to focus a little bit of attention on things like coin or Mara, Riot. Because if we get the follow through in Bitcoin, we'll see it in the proxies. NVIDIA flows yesterday were nonstop. They just kept coming in, blocks and sweeps in the orders on the options. It was impressive. The amount of hits that just kept coming through again and again and again and again and again. And it was interesting how it went from, they were selling puts, which makes sense. And then they flipped over and they started buying calls. So that's even more aggressive, right? Selling puts is kind of bullish. Buying calls is totally bullish. So they were June 16 puts, June 9 calls. Let's see if I can put these somewhere. You guys, we can kind of go through them real quick. Now playing UOA, unusual options activity, is kind of its own breed of trading. Most of the people that I know that trade UOA specifically target the exact strike, the exact option that's being traded. But you don't necessarily have to do it that way, right? You can use the bias of what's being traded and then develop a plan on your own. I'm just about done. All right. So it started out kind of small. The June 16 puts, 340 strike. And they were hitting at about 320 on that one. Same thing again, 616 expiration, 340 strike, another 585. And then, why did I do it twice? Yeah, I think I might have just copied that one twice. Then 1308, 1567. And this is where they swapped from the puts to the calls, still hitting that 616. Back to the puts. And then the calls. And it was those 425s that were getting hit. But they swapped dates. They started getting a little closer, went from 616 to 62. So it was like multiple groups of or multiple firms. Some were hitting on the front end really close at the 602. Some were hitting at 616. Some were more aggressive buying the calls, while others were less aggressive selling the puts. All of these came in yesterday. So it was really getting hammered, and it's not done yet. So if you're looking at NVIDIA thinking, oh yeah, that is way, way, way overbought. Gee, I'm going to short that sucker because it's sitting up in the nosebleed. I wouldn't do it yet. It's not done. It's likely going to pause and digest and just kind of chew around up here. But I don't think this thing's going back home again anytime soon. So if you're looking to short this thing, do yourself a favor, let it at least get an inside day breakout at the very least before you try to short this thing. And it does have a market maker move of 1.7. So on top of what it could do on a regular, normal, everyday basis, add in that it could also move another 1.7% today on top of that. And AMD is getting a little bit of love. Looks like all the semis are still getting a little bit out of this, right? So we got AMD. Look at the semiconductors at the SMH. It's bid. And MU. TSM. The main thing though is just it's going to be NVIDIA. And the idea that you probably don't want to short this thing yet. But on the other side of that, I'm not sure that you'd want to take it for a long. All right, gold's getting a little bit of a bid, but really this is more about a bounce off of support than it is, about getting flows. So it makes sense we're going to bounce a little bit, maybe a rally into resistance before we roll over and continue the move to the downside. And it's not that I'm bearish precious metals and gold. It's just the fact that US dollar Japan is still going crazy. Thanks, Buffett. And that's just, that's how it is right now. So he went over there and brought all the eyeballs with him, brought the attention. He started, throwing money around. And it basically crushed the whole precious metals 2023 theme. So until things begin to calm down a little bit, you got to just go with the flow. This is not done. Looks like it's just taken a little bit of a break. So we got the 10-year pulling back a little bit. That's a start, but again, that's not enough. We need a lot more out of this thing. So everybody be careful. I hope you have a good weekend, and we'll see y'all next